Wall Street experienced another turbulent trading session as rising geopolitical tensions and surging oil prices unsettled investors. U.S. stocks moved lower, with the Dow Jones Industrial Average falling by about 784 points, while the S&P 500 slipped around 0.6% and the Nasdaq declined roughly 0.3%. The sudden shift in sentiment highlights how fragile markets remain, particularly when global political risks begin to threaten energy supplies and inflation expectations. The primary trigger behind the market decline was a sharp spike in crude oil prices. Oil jumped more than 8% amid escalating tensions in the Middle East, raising fears of potential disruptions to the Strait of Hormuz, one of the world's most critical oil shipping routes. A large portion of the global oil supply passes through this narrow channel, meaning any threat to the route can rapidly send energy prices higher. Traders are increasingly concerned that if tensions intensify, crude could move towards $100 per barrel, potentially reigniting inflation pressures. Despite the broader market weakness, some sectors showed notable resilience. Semiconductor giant Broadcom rose strongly after forecasting continued explosive demand for artificial intelligence chips, underlining the strength of the AI-driven technology boom. However, airline stocks moved in the opposite direction as investors reacted to the prospect of higher fuel costs. The mixed reaction across sectors suggests the market is not collapsing outright, but rotating between industries depending on how they are affected by rising energy prices. Investors are also paying close attention to potential policy responses. Reports indicate that U.S. officials may consider measures aimed at calming oil markets if prices continue climbing. At the same time, traders are reassessing expectations for Federal Reserve interest rate cuts, as higher energy costs could complicate the inflation outlook. With geopolitical tensions rising and energy markets becoming increasingly volatile, the coming trading sessions may prove decisive for the direction of global financial markets.